probably by the end of the year, you're going to see $100 gold swings and $5 silver swings. I said that 2 weeks ago, and we actually had it, right? The silver went from $29.91 to $24 in a span of 48 hours.
The land of Arcadia.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And of course, another exciting rally in the silver market seems to be happening a lot more frequently these days. And fortunately, now while there's a lot of silver forecasts going around, it's a pleasure to be joined by John Lee, who had quite an intriguing silver forecast, which we will cover in a moment. John Lee of Silver Elephant Mining. Thanks for making some time today, and it's great to have you on here.
Good day, Chris.
Well, perhaps to start first, I know people have been watching this one all day. Let's pull up our silver chart where as of early Tuesday morning, price got up to $28.50, almost $1 lower and then rebounding. John, why do we see such increased volatility in the silver market at this particular point in time?
Well, Chris, silver is such a small market. It's 1 billion ounces of production, which is around $25 billion. That's a drop in the bucket in terms of the available investment pool. So I look at the gold market, which is a better indicator, and then of which silver is to follow. Gold just broke out of its all-time high of $1,950. It went as high as $2,100, and now it's corrected to test the support level of $1,950. It looks to have successfully retested the support. And during that time, silver is broken out of its 6 or 7 year resistance level of $20. It's not unusual to see that whenever you break out of such a long-term base that you have some violent action. So in the case of silver broke out of the $20 level and quickly run up to almost $29.50, or maybe it touched to $29.91. And then again, it's not unusual to see that silver then rescinded back to test the support level around $22 to $24, of which I think it did. And now it's going back up to around $28 level. As the bull market starts, I think first of all, just the percentage terms, $2 swing on a $15 price is different from $2 swing on a $30 price. So on the absolute percentage terms,
right,
what we're seeing actually is now no different from say $1 swing back when the silver was in teens. And I've said before a couple of weeks ago, probably by the end of the year, you're going to see $100 gold swings and $5 silver swings. I said that 2 weeks ago, and we actually had it, right? The silver went from $29.91 to $24 in a span of 48 hours. And volatility is the name of the game. We just got to get used to it.
Yeah, and certainly, I think we actually did have a $100 day in gold last week on one of those.
Oh, we did already. Okay.
It was down $100.
That's right. 2,100 to 1950. Yes.
So
that's right.
I know it's amazing because so much has happened so quickly this year. Where I find myself, even about the metals, I'm saying, well, watch out. The Fed's going to keep printing, gold and silver are going to go up. And it almost hasn't sunk in that gold is already, anyone who was talking about gold doesn't have to say one day anymore. It's already happened. It's at all-time highs. And interesting on this chart here, because we see finally, after that beatdown last week, gets above 2,000, and it didn't take long. You see this spike down, and also what I wonder if the CFTC ever looks at this. Sorry if our heads are blocking part of that. But you see these massive spikes in volume, coincidentally, right when the price often gets hammered. Similar situation here in silver. Any thoughts on that and what's going on there?
Yeah, well, Chris, this is interesting because the correction happened at the market open. Used to be the COMEX 8:15 a.m. You got the action happening, but because the floor is closed due to COVID, and now the timing is a little bit out of sync, but still early, morning time. All this happened. The correction happened in light of the correction of the dollar index. So that is actually, fueled a bit even more sort of questions as to why that would why would have a correction like that. Chris, we had just a brief talk right before the show got started, and there's always the question of manipulation. And the way I look at the market is it's not just gold or silver, but you can talk about interest rates. And now at a 0% interest rate, I mean, who will lend money at 1%, a 10-year as a 0.6%? Who would do that? Doesn't make any sense. So I would just say that there's a lot of market participants and actors that are not exactly profit driven. So there are other ulterior motives for them to to do the things that they do. And you can also talk about, we can talk about the plunge production team. That's very well documented. And so I think the key here is, Chris, not to be, but at the same time, it's about having a mindset, and you digest information and have sort of a train of thought is, how is it going to lead you, right? So I always hear about, the price came crashing, and it's the commercial, they're doing their thing, and I'm like, well, how is that going to translate to how are you going to respond to that? What are you going to do about it? Mm-hmm. Right? So that's the whole point. How are you going to profit from that? So it's no good sitting on your desk looking at your account in the red and then be complaining about it. So I think the two takeaway I just share with your investors, given that I've been around for 15 years, is first of all, risk management. So if you're on margin, and if you think a critical support level now is say $24, how you feel about if silver go to 24, right? You don't want to be selling at the bottom, you want to be buying at the bottom. So the risk management is very important. And I think that's the first thing that came to mind. Risk management is very, very important. And then secondly, yes, the point about secondly is, if you think the market is manipulated, and I was just on the prior show, the way you want to sort of visualize that is, think of it like a Three Gorges Dam. Okay, there's a huge flood in China right now. If you have the water keep building, so that the critical resistance support level comes even more into play. Because at some point in time, the physical supply, the fundamentals is going to overwhelm the paper market, just as palladium did. We saw the action from 1800. Once it go past 1800, 1350, it went to 2000 in the blink of an eye. Same with the silver market. That $20 silver was the lid on the market. So once it took off, you see that went very, very quickly. And that's why I say, hey, look, there's a bit of resistance on the $26, $28 level, but I don't see that as a critical levels which overcome. I think it will get overcome if gold were to stay over $2,000, so say by Monday. Then once you pass $32 is a bit of resistance. And when and how that will overcome would be dependent on a lot of factors I mentioned earlier. Not so much looking at the technical trends of silver per se, but looking at the peripheral sort of how the equity market is doing. You got to have a compliant equity market, because silver is really more of a greed trade, whereas gold is a fair trade. You got to look at the price of gold, and you look at the statements coming from the government and whatnot. So I think the first level is $32, and I do believe that if gold were to stay above $2,000 for the next by early September, you're gonna see that $32 target very, very quickly within September.
Yeah, and wow, what a lot of great things you mentioned there. Especially, I love how you talk about the mindset. What is your plan in place if it goes to this level? How do you respond? Because the silver market is going to do what the silver market does. We know it's manipulated, and you're exactly right. And I've been there where I'm pounding stuff because the price is down, and yet if you structure whatever it is, your investments, your life, your business, so that however someone is doing it, you accept what is.
What are you going to do about it, right? You can say, hey, don't do it. Don't do it. Just what are you going to do about it? Yeah.
And I think that's especially worthwhile advice, because I know we have a lot of people come on here and talk about silver, but I don't know if anyone else has done this, where here we have July 14th is a video with John Lee talking about an alert, $32 an ounce silver call. And let's just put this in context, because here is the silver price, July 14th. You see, this was back when silver was $18.89. And here's John talking about it. So, and again, here's the price of silver today. Not quite to 32 just yet, but John, that was a darn impressive call. And what can you walk folks through what you shared there and how you saw that coming?
Well, Chris, the video actually was posted July 1st on Canada Day.
Okay.
And at that time, you can see the volume, you can see higher highs and higher lows. And I think, first of all, we look at the technical trend first and then just see if the fundamental support. But if we just delve into the fundamental for silver for a bit, the Fed has made no secret. Sometimes the players take a little time to catch up, but Chris Powell already said a month ago that interest rate is going to stay at zero for the next 2 years. So, you know, there's genies out of the bottle. There's no secret there. And then if you look at the QE infinity, where the Fed's balance sheet has gone from 3 trillion to 7 trillion in less than 4 months, and then and the government is running at the rate of $1 trillion, and the Fed and then the government is running at the rate of $1 trillion deficit every quarter, Chris, and it's in the foreseeable future because Trump is talking about a additional stimulus checks and capital gains tax, income tax for the middle family. And you have a trade war going on, unemployment at 10 to 30%, depending on how you measure unemployment, whether there's, you know, it's motivated seeker of workers and whatnot. You got a labor participation rate of 50%. If you adjust that to 75%, then all of a sudden your employment will double, right? And then you have the geopolitics of trade war, situation in Hong Kong, the China-India border dispute, North Korea. Somebody set off a bomb in Lebanon, nobody knows where it came from. And then if you look at the investment dollars of the investment pool, and only 2% of that money they're in gold and silver. So therefore, I would think that, and then if the couple, so that explains. So that was the rationale that explained the technical trends. And sure enough, I mean, Buffett just bought $500 million barrack. We can talk about it. And I also authored a video to a letter to Buffett 2 months ago. So I think everything is also conjured up together. And I think specifically to answer your question, I look at the trend, I see higher high and higher lows, and it's building a sort of a ascending triangle. And to that point, sort of a horizontal wedge and then going up. And that on July 1st, we see the commercial, and the July 4th trying to hammer down the market. I just felt like the floodgates can no longer be capped. And that's why I made that forecast. And not only do I make the forecast on the target, but I also provided a timeline, which is a bit unusual. Usually the forecasters will tell you either the price or the time, but they don't tell you, they don't tell you both. Mm-hmm.
Yeah, well, again, impressively done. Pulling up the yearly chart in a second here. And of course, obviously the question, what do you see coming next at this point now that, again, we're, let's call it $28 silver at the moment. Here's the chart on the year.
Yes.
Do you think we will see $50 silver this year?
Yeah, Chris, go back if you see that chart, right? Clearly, as I was talking about higher highs and higher lows. So since March, there's a very clear trend of the market going very high and higher lows, and there's heavy accumulations. And usually, the price will break out right when you see that false breakdown, which happened in March. You can again talk about the fundamentals, but purely from the technical perspective. So that breakdown in March really cleaned out all these sellers that were going to sell. So therefore, that paved the path for a rise going forward. And going to your question about, hey, do you see $50 silver? Well, there's a couple of ways to look at things, and I actually don't pay a lot of. I go one level at a time, and each level is already a very significant gains. But if you talk about sort of where we're going 6 months, maybe into the longer term, if you look at in 2011 when gold was $1,800, silver is $50, and at that time the gold to silver ratio went to 31. So again, if we were to go back to if I were to go back to the gold market as a guide for where silver may be headed, gold took out historical high of 1900, and if you just do it's a huge saucer, right, since 2011. So you go from 1800 and then down to 1,000, 1,100, and now it's back to 1,900. So if you were to say that, if you were to subtract the bottom from the neckline, so it's about 1,000, and you add 1,000 to the neckline, and it's from 2,000 to 3,000. It's just not very hard to figure out. So then on that premise of gold target of 3,000, which is clearly supported both technically and fundamentally, then you apply a 30-to-1 gold to silver ratio, then you're looking at $100 silver. So I would say that is probably the target for silver, and I would say it's probably within the 12 to 18 months target, and it's going to come sooner probably than later, because we're about like microchip development, the Moore's law. Everything is sort of moving at a faster pace, and also the commodity market. If you study it over the past century, it's been a decade. Usually spend 10% of the time going up, 20% of the time going down, and 70% of the time going nowhere. And now, as I say, it's going to go to $50 this year. Again, I don't know. It would depend on gold. I think it would depend on gold. I think first level is 32. And as I said, I do believe that gold doesn't need to appreciate significantly from where we are. It just needs to take out the $2,000 level and have the players convinced that the breakout is genuine. Then silver is going to cash quickly to 32. Now, from 32, we got to look at different things in different times. Is it Trump elected or not? Are we going to get a new Fed chair? If Biden elected, there are a lot of, you cannot separate money from politics, because money is the property of the Fed. And so I think at that time, we can get on the show and talk about where things are and how everything sort of marshal up together at a 32 at that time. But I think silver is going to go fairly highly correlated to gold. And another example, like if you get a precipitous decline in the equity prices, which I don't see in the foreseeable future, that also going to impact the silver price negatively. So there's a lot of factors at play. The first thing first, gold is going to stay above 2,000 by early September. If that's the case, we're going to have a genuine watershed event. That's once, this is the mother lode of all. And the silver is just going to quickly zoom up to $32. And from there, the next level will be 50, and from there it's really anybody's guess. The top only happens in hindsight. Yeah,
and it's fascinating. You mentioned some of the fundamentals. You mentioned some of the technical and the various banking factors that get involved. Real quick, I'd like to pull up another. We'll pull this one, which shows this is the silver ETFs like SLV and the others. This is over the past decade. You see silver getting pounded from $50 here in the gray line till it's rebounded a little bit here yet. The whole time, I mean, you would have expected the opposite, but this is the amount of metal that's allegedly has gone vertical recently. Also over on the COMEX, we're seeing almost monthly record deliveries in terms of how much metal is being delivered. So then pile on, I just released the big silver short where I asked guys like Andrew McGuire, David Morgan, one after another for every, and actually I'd love to get your opinion on this too. For every ounce of silver, how many people think they own it?
Nobody knows. Are you talking about ETFs?
ETFs, COMEX contracts. In the book, I did not get an answer lower than 500 to 1. Obviously, there's multiple ways to calculate something, but I mean, you add that on, and that's why I've always thought that some of those numbers, whenever that's unwound, and maybe that'll be tomorrow, maybe it's a couple years, but there's a reason the housing bubble didn't dwindle down slowly. You put that much leverage on anything, especially a commodity you can't orchestrate out of thin air, although fortunately you're finding a lot of it these days, which we'll mention before we wrap up. But I mean, thoughts on that?
Yeah, well, Chris, I worked with James Turk and David Morgan back in the very early days, because I got into the precious metals market after I retired from the .com in early 2000, and by a stroke of luck. And my girlfriend was at that time in Vancouver. I moved from Silicon Valley. I loved that country at the time. The dollar was trading at, Canadian dollar was trading at 70 cents to the dollar, and it was like a wonderland, right? Everything's so cheap. I don't think there's any question. Well, again, we're going to do this manipulation. I think there was some unsubstantiated talks about. There were some prospectus of ETFs, precious metals ETFs with pictures of bars, but it turned out to be allocated storage of private investors. So I thought that was kind of interesting. And then if you want to talk about gold and silver, you can talk about a while back, right? That the gold in Fort Knox already had been swapped with Bundesbank in Germany, and that the gold, and if you look at the audit of the Treasury balance sheet, instead of say gold, physical gold under the assets is gold receivable or gold receipts. And now the gold of Fort Knox had been leased out to the JPMs and being flushed in the market. And then you can talk, I mean, a lot of interesting stories. And you cut about back to the Nixon times, and then the U.S. government was duped into selling the gold to suppress $35. And there's some very smart Jews of try to lure the government and say, hey, look, if you smash the market down to $35, the market is gonna calm down, and you can buy that gold back at 15, whatever, and then they dump that gold into the Linden market, and then the gold disappeared. So again, I think the question here, Chris, I think there when there's smoke, there's fire. The question is, hey, what are you gonna do about it, right? So that's again where the technical trends coming so important into play. Despite all the suppressions, despite all the actors that were actively trading the market, shorting, and it makes no sense. And you should talk about, Chris, real quick, there's a lot of volume on silver shores and how silver is special. And not really. If you look at the oil market, for example, it went to zero, for God's sake, negative $40. And on a given day, I'm also active in the oil market, that you have 10 to 50 times more volume there. There's a physical commodity changing hands. So all in the oil market, interest rates at 0%. Who will lend money at 0.6% over 10 years? It doesn't make any sense. None of it makes any sense. I think again, the key here is you got to look at the technical market. Let the technical be the trend and not the fundamentals, not the other way around. I think a lot of people make huge mistake, and I talk about this. Very important is if you let the fundamental dictate your decision making, is recipe for disaster, because then you're going to fit the technical trends with the tinted lenses. So it's important to look at the technical and use the fundamental to supplement that decision making. And for silver and for gold, especially gold, again, I highly recommend investors can check out my Twitter and then looking at gold. I mean, it's an unequivocal breakout of an all-time high, huge, massive saucer that you've got to follow the trend. And then eventually I'll just leave you with the note, Chris. Reminiscent stock operator. It's not difficult to spot a trend, getting at the bottom of the market. The key here is to stay tight. And the 90% of the traders make very little money. You want to get out at 20% from the top, not 20% from the bottom. And right now we're not even 5% from the bottom. So gotta sit in, enjoy the ride. You don't want to be selling your position, silver position today, and then wake up silver up $5 and you don't know what you're gonna do. I've been there before. Similarly, you don't want to wake up in the morning and see silver down $5 and you get a margin call, of which you'll be selling at the exact wrong time in the market. Get a position you're comfortable, sit tight. It's not going to be long. I think it's going to be 12 to 18 months, if not 6 to 12 months. The scare of COVID is going to go away. Monetary issue is going to go away. They're all playing for everybody to see. So I think we're probably near the end of a huge, massive run out than the beginning. But that run is going to be very violent, not different from 2011 when gold went from 800 to 1500, or the .com. NASDAQ went from 1,500 to 5,000 in a span of 12 months or less.
Yeah, and ironically enough, gold is now back over 2,000. I think even just since we started talking, although, John, I think I figured it out. There's a big news story last week, and I couldn't understand it, although I think I just figured it out, because Warren Buffett, who has often talked about how gold is a useless, barbarous relic. Why pay, even at like $1,500 gold, I guess, maybe get a nice door stopper, 5 or 6 ounces. Why would someone spend $10,000 on that? And then sure enough, there he was buying a large gold company. It sounds like you get gold just fine. Did you explain the economics to Warren Buffett? And if so, can you also explain it to Ben Bernanke, who claims to not understand gold?
But let me just end by saying that nobody really understands gold prices, and I don't pretend to really understand them either.
Thank you. Mr. Chairman, thank you very much.
John, what happened here, and why is Warren Buffett buying Barrick?
Yeah, hey, real quick, Chris, I don't think gold is going to go down below 2000 because it's such a emphatic breakout from 1950 to 2100, and now it's gone back to test the support of 1950. Given it is such a significant and historic breakout, it would be really strange to retest the support twice. It would be quite strange, low probability. So you see the players trying to hammer the market, even though the dollar index was down, but it rebounded above 2000. Again, I think the gold will be out of the ICU if it stays above 2000 by September. That will be a firm breakout. Now on Buffett, I actually recorded a video. It is available on YouTube under Silver Elephant Mining, John Lee, and I wrote a letter to Buffett, a video letter in late June. And I say, hey, Buffett, you sold airlines, you sold airline stock, you sold banking stocks, and you sold a lot of stocks, and now stocks are at all-time high. You're seeing $100 billion. What are you going to do? You bought silver before. Why don't you do it again? And let me be clear, Chris. And sure enough, he bought a couple of things. Let's just get to the thing. Sure enough, he bought $500 million Barrick. Chris, this is only the start. Think about it, right? If you buy mining companies, you have to be into gold. And if you have $100 billion, you will not be satisfied only getting $500 million of Barrick. So you're going to see additional accumulation of Barrick. And it makes logical sense. And I think it's a complete cinch. It's a foregone conclusion, Chris. He's going to buy gold. But if he turns to the sequence, he's going to buy mining first and buy gold, right? If you buy gold first and then buy Barrick, he's going to shoot himself in the foot. And secondly, Chris, talk about Bernanke and Buffett. These people know very well. These people are not stupid at all. Buffett talked about gold being unproductive. Bernanke talked about gold being barbaric relic or Alan Greenspan. Well, I mean, Chris, what are they going to say? Are going to say, you know what, you should buy gold because dollar is fiat and the monetary inflation is running havoc? I mean, they're saying exactly, I mean, it's just like Warren Buffett say, you know what, I believe in government. I believe in paying the rich people paying their fair share of their wealth in taxes. I believe in paying taxes. Chris, what are they going to say, right? If they say, I don't believe in paying taxes, well, guess what? You're going to get our IRS audit. You know, there's a lot of tax rules, right? Like, again, you know, there's a lot of what you hear and there's a lot of what's going behind the scenes. But for Buffett to be establishing a position, I mean, and also there's the talk about he's for American, don't bet against America. And I also talked about in my video, and there's some people think that you're buying gold, you're anti-American. I mean, really, if you look at the Constitution, the Constitution specifically mandated to have the legal tender, but anything but gold and silver. So everybody know exactly how it would play out. So it's like a wolf pack, right? The power that be. So now you started getting these descendants coming out of the wolf pack because again, it's self-preservation that matter. And we have a huge run up. I mean, the technicals and fundamentals are glaring for everybody to see. Yeah, I just leave you with this. My mother, because I'm holed up in Taiwan here because of COVID, my mother and I just visited her wealth management manager last week. And my mother say, John, I say, hey, get the hell out of the US dollars because she's using all the structured insurance product that pay 2% yield every 6 months. I say, Mom, these guys in New York, BlackRock, they're playing your money with derivatives. They charge you more fees than they're giving you interest. Buy some gold. And it's, oh, Johnny boy, last time you told me gold, 2001, gold's going to 5,000. And, you know, there's a lot of disbelievers. You and I are in a special camp, not thinking that gold is going to go, but we're 2% of the world population. But however, as I said, by September, when the guys that come back from the Hamptons and, you know, back to their trading desk, and you see a $2,000 print on gold, I believe that you're going to enter into a parabolic phase once everybody see gold over 2,000 stands. And from their point, the game is only starting. It's only starting. And if you look at silver in particular, we run a silver mining exploration company. There are only maybe 50 companies listed altogether in all publicly listed companies are anything related to silver. And the guys that actually produce silver for profit today is probably less than 10. And then a qualified silver junior or major is probably less than 20. So it's a very small universe already in a small world in the market. Choose wisely, but we're absolutely at its infancy. Use gold as a guide. I will not look at silver day to day because you're dealing with the bots, with the AIs, with all these computer machines. They know how to manipulate a trend that looks exactly like bearish to induce your selling. So I will not look into the data. You're not going to win that war. You're just not. And I would just say, have a good cushion. And then also don't sell your positions because it's like, what are you going to do if silver gap up $5? Are you going to buy your position? I don't want to be in that situation. I've been there before, Chris.
Yeah, John, I think that's some great advice. And I'll bet your mom appreciates that you're also, on top of everything else, becoming a Warren Buffett of your day with Silver Elephant Mining. Appreciate you actually did stick around to record an interview, which will be coming up shortly at the end. But for just real quick, before we wrap up, for anyone who's not already familiar with what you're doing with Elephant Mining, if you could just give them a couple bullets and let them know why I think they'd be well served to watch your profile.
Thank you, Chris, for the plug. Well, Silver Elephant, we're a TSX main board listed silver exploration company. We target equity shareholders, stock investors who want to own as much silver in the ground as possible. It's about leverage, our company. And our companies consist of former executives from Hecklock and Barrick and exploration geologists that are excellent at scouting for silver prospects, drill them, develop them, add resources in the ground, and create shareholder values. We're backed by Eric Sprott and 9 Point Funds. And some of the well-known marquee institution investors in US, in Australia, in Toronto. 57 million ounces of resource already today, and we're aiming for 100 million ounces in the next 12 to 18 months. Excellent trading liquidity. We're trading about $1 million a day, just under $100 million market cap. Very well suited for nimble retail investors, which is an initial position for institution investors.
Yeah, and there you can see Silver Elephant. You can find them by Googling Silver Elephant Mining. There is the website. And
do a 5-year chart, Chris.
What's that?
Do a 5-year chart.
5-year chart, and come on there, Yahoo. So
oh, you see that
Yahoo's
there, right?
Going back to September of last year.
Oh, that's fine. You can see that saucer in the breakout at 33 cents. Up at like price of gold. That's one of the things, Chris. You want to make sure you buy a company that has a good correlation to the metal prices, because there's already difficult enough work to guess where the metal prices are going. You don't want to add the extra layer of uncertainty of your mining share doing its own thing, right? And keep it simple.
Well, I like the approach you're going after. Reminds me of, where did I have that pulled up? Yeah, here is, it's funny, this is Warren Buffett talking about this, not the first time he bought silver, the second time when he loaded up in 1998. He also bought silver when LBJ was demonetizing it.
Chris, you brought that great point. Let's get away from the cookie cutters. And I follow Warren Buffett for 10 years. Warren Buffett says something very interesting. He talked about the decision he bought silver. And he specifically said in his letter in 1997 that it was not about inflation. He said that. It was very illuminating. And so he was actually purposely, it's almost like he doesn't really want to go there. And he knows very well it's inflationary. Yeah. And he talked about the greenback pollution. So for Warren to go to gold and maybe even silver is really his last resort. Because, a man of the second largest wealthy person or a third or whatever on top 5, you not only have to worry about making money, but you have to make sure you mend fences with all the power that be, right? Yeah. So for him to start going to gold, he has made a very calculated decision into buying gold. And he has considered all the potential ramifications in doing that. So I would say investors should really take that into stride. We're into very unusual times in the next 6 to 12 months.
John, I sure appreciate that. Is one of many great pieces of advice that you've passed along today. Thank you so much for joining me. And folks, to find out more about elephant mining, which John Lee is running, recorded another great call on that, and it is coming your way now.